Hi guys. Today we will start with Vision IAS PT365, their economy study material. This will be helpful for your UPSC CSE preparation, your RBI preparation, where you're in ESI portion, and it will be helpful for your other competitive exams, especially in your current affairs. So we'll start with the very first theme, which is growth, development, and poverty elevation. The first is, so there has been news that there's a gap between the GDP and the gross value added of India has increased. So for that, we first need to understand what is GDP and what is GVA. So GDP is calculated at market price. So it is the market price of all goods and services produced within the territorial boundary of the country. And gross value added is the total value of goods and services produced within a country after deducting the cost of input and raw materials. So just to understand that, so if you consider, suppose if we consider the example of India, so whatever goods and services produced within India, either by a resident of the country or either by a non-resident of a country, if that goods and services are produced within the country, so all that will be included in the calculation of GDP. Here we are talking about economic GDP, and it will be calculated at the market price after considering all the taxes, subsidy, cost price, everything. So there are generally three methods, as you can see, to calculate GDP: value method, income method, and expenditure method. And there are three things which come here: factor cost, basic price, and market price. So when you want to go from a factor cost is nothing but the factor of production, your men, money, material. So when you want to go from factor cost to basic price, what you will do, you will adjust that GDP for net tax on production. What you mean by net tax? Net tax means taxes minus your subsidies. So आप जब goods या services produce कर रहे हो, तो whatever the net tax is there, you will adjust this. Basis that you will get the basic price. If you want to go from basic price to market price, again you will adjust for the net tax, but here it is on product. So what is GDP? GDP is calculated on the market price. So if you see, the very first method of GDP calculation is value added, right from the production side to the consumption side. What is the value added at each stage? The summation of those value added gives your GDP only. So gross value added is nothing but the value addition at each stages across each sector, but this gross value addition is calculated at basic price, and GDP, as you can see, is calculated at market price. So if you want to go from basic price to market price, what you do? You will add the net tax on product. Since gross value added is calculated sector wise, all the net tax on product will be calculated as sector wise, and this is very important because when you have a this basis the sector wise, so government can make an estimate whether they need to support that particular sector, support in terms of subsidy, or they want to earn more revenue. There's a more demand in that sector, so they can earn more revenue through levy of taxes. So it helps to understand the basic economic state of a country through gross value addition. And one of the most important thing, gross value addition is from a production angle, and its estimates are prepared by NSO. So after we have understand the difference between GDP and GVA, so GDP is an internationally accepted method and GVA is used to understand the sector wise details. Okay? So GVA at basic price, the base year is 2011 and 12, so basis, so you will consider the price of 2011 and 12 to calculate the gross value added of a particular year. So it become the primary measure of output in 2015. It was done, why it was done? In order so that we can conform to UN system of national account, which were introduced in 2008. And this SNA are the international statistical standard for national accounts, which has been adopted by United Nations Statistical Commission. So GVA is calculated across 8 sectors: agriculture, forestry, fishing, mining and quarrying, manufacturing, electricity, gas, waters, supply and other utility services, trade, hotel, transport, communication and services related to broadcasting, financial, real estate and professional services, construction, public administration, defense and other services. अब ये जो GVA है, its quarterly and annual estimates are given by NSO under all these 8 broad sector. So why there is a gap between GDP and GVA if we are able to understand it logically? So GVA is calculated at basic price and GDP is calculated at the market price. That is the first major difference. And now GDP will be lesser than GVA when the amount of subsidies are more, and GDP will be greater than GVA when the amount of taxes are more. It means a country GDP might be growing just on account of tax compliance. So if you want to see an actual state of affairs of a country, GVA is very important from that standpoint. Now the utility of both, as we've understood, GDP helps to identify the health of an economy, whether the economy is growing or experiencing recession. When does recession happen? When there is a 2 consecutive quarter of decline in output, then there is a recession. Second importance of GDP is it identifies the standard of living of people via the private consumption and income data. We have understood that there are 2 more methods of GDP calculation. Income method, that is the income earned by the people living in the country, and expenditure method, all the expenditure, the personal disposable consumption expenditure, government expenditure, every expenditure which is done within the territorial boundary of a country. These 2 helps to identify the standard of living of people. Since GDP, as we have known that it is an international statistical method, so it makes sure it helps actually in cross country analysis on various parameters. GVA, as we have understood, if we want to know the real picture of economic state affair, GVA is very important. It provides us with sector wise and region wise breakdown of value and help us to identify the productivity of the sector, if a particular sector need impetus or not. So there's certain news. Green GDP. So RBI has recently released a paper, not recently, last year, about India's green GDP that is growing faster than its traditional GDP, and it's an opposite trend because earlier India's traditional GDP was growing. So what is green GDP? Green GDP is a term first proposed by UN in 1993. It takes into account the estimate of environmental degradation. So what we have understood till now is about economic GDP, the monetary value of the GDP. So what does green GDP do? It adjusts your actual or the economic GDP for all the economic degradation, depletion of natural resource, saving of resource and environment into your national income accounts. That is nothing but your GDP of the country. So if you want to understand here, I've explained it. Green GDP is nothing but your GDP minus the value of your environmental degradation minus P. P means, for suppose a company has set up a plant somewhere and has caused the environmental degradation. So as a part of the CSR activity, they have undertaken certain expenditure to clean the pollution, to reduce the PMS. So all these are expenditures. These are not adding to the GDP, so they are deducted. So whatever degradation is happening to the natural capital of a country is adjusted in the GDP to calculate the green GDP. So green GDP is nothing. This output measures the sustainability in terms of environmental sustainability, ecosystem sustainability and community sustainability. Okay. So India's attempt to measure GDP. So Ministry of Statistics and Program Implementation has initiated the compilation of environmental accounting under NCAVES, Natural Capital Accounting and Valuation of Ecosystem Services. It was a project which was launched in 2017 by UN and European Union to enhance the knowledge and all the accounting processes which are involved in ecosystem accounting so that you can calculate your green GDP. Next is Green Accounting for Indian States and Union Territories project So this project was introduced to build a framework. So now in order to calculate a green GDP, you need a framework. So that's why this project was introduced. And the first state in India to measure the gross environment product was Uttarakhand. There's one more related information that you can use in terms of this, which is EKC curve, which argues that in initial stages, before you have achieved the peak industrial economy, whatever the industrial production, the capacity introduction that you're doing, that is actually adding to equal amount of environmental degradation as well. So there's a positive relationship between your GDP growth and your environmental degradation. But after a certain point, after the peak of industrialized economy, this the level of consciousness and awareness among the society increases. As a result, people and the community invest more and more in reducing those pollution, make the environment more cleaner. As a result, the industrialized economy invest more in a cleaner technology. So though the GDP increases, but the level of environmental degradation, it decreases. This is the very first thing. Now second is Human Development Report. Human Development Report is released by UNDP, which is released 2021-22 report. Every such report that these organizations releases, they have a particular set of theme for that particular year. So this time they have uncertain times, unsettled lives, shaping our future in a transforming world. So UNDP has released their first report in 1990 with 3 key dimensions. First was life expectancy. Second is about education that is expected in mean years of schooling. Third is about standard of living, that is your GNI per capita. What is human development? Human development is all about enlarging the people's freedom and opportunity and thereby improving their well-being as well. As a part of Human Development Report, UNDP releases 4 set of indices. The first is Inequality Adjusted HDR. It actually measures the achievement of a country on 3 broad parameters, which is longevity, education, and income distribution among the resident of the country. Second is Gender Development Index. It estimates the HDR value for the men and the women. Third is Gender Inequality Index. It looks at the issue of gender inequality at 3 broad parameters. First is the reproductive health. Second is empowerment. Third is labor market. Fourth indices is MPI, which is Multi-Dimensional Poverty Index. It captures the poverty in developing economy in 3 parameters: health, your education, and your standard of living. So this report, it has key findings that the global HDI has declined for 2 consecutive years, that is 2020-21, which is reversed the 5 years of progress. India is ranked 132 among 191 countries. Sri Lanka is at 73, China 79, Bangladesh 129, Bhutan 127 are performing better than India, all these neighboring countries. Though India, there is a positive aspect also, that India is bridging the human development gap between women and men, which is faster. The rate at which is bridging is faster than the world. We'll come to this topic later. So now, since you know that the global HDI is declining, why? Because of the COVID-19 pandemic. As we all know, it has impacted the life expectancy of the people. Russia's invasion of Ukraine, climate crisis, not domestic. Why at India level it's falling? Because of the life expectancy. The second important theme here is after health is education. The expected year of schooling in India is 11.9 years and mean year is 6.7. The third theme here is standard of living. So India's per capita income in terms of PPP, purchasing power parity, has gone down by 5%. So there's GDP, there are 3 types. There's a nominal GDP, real GDP, and GDP at PPP, purchasing power parity. What is this? In just a basic sense, nominal GDP क्या होता है? If the GDP of a country is 100 rupees, or for suppose if the GDP of the country is 100 rupees only, okay, and $1 is equals to 100 rupees. And then the nominal GDP of the country would be $1. Nominal is just that you are converting your value of a GDP as per the conversion rate. GDP in real terms, what has happened is, whatever is the nominal GDP, you adjust for the inflation. So if inflation is high, the nominal GDP will be greater than the real GDP. Now GDP at purchasing power parity. What does it say? Instead of converting the value of GDP in exchange rate directly, you should understand what is the purchasing power of the money in your country. For suppose in US, a dollar can buy, that is, if suppose a dollar is equals to 100 rupees, a dollar can buy 8 apples. Maybe in India, the same dollar, the same 100 rupees can buy more apples. This is a hypothetical situation. Then $1 should be equals to X amount of rupees in India that can buy 8 such apples. So that's why GDP at purchasing power parity is always greater than the nominal GDP, because the purchasing power of money here in India is greater. Because if you can see that US is a developed country, the standard of living is very high. The amount that a $1 can purchase there is very less. As a result, if you compare GDP at nominal and purchasing power parity will be higher. But it has also dropped by 5% during 2019 and 2021-22. Now HDR, as you know, is released by United Nations Development Program since 1990. So it's very important to understand these organizations, where they're headquartered, when they form, who are the members, number of member countries, and whatever other works that they do. So UNDP is headquartered in New York. So it was established in 1965 by merging United Nations Expanded Program of Technical Assistance 1949 and United Nations Special Fund 1958. So what was the mandate with which it was set up? Is to end the poverty in the country, build democratic governance, rule of law, and inclusive institution. It works in 170 countries and territories, and India is also a member country. Other key important information: it is the lead agency of United Nations on international development. It advocates change. It connects countries to knowledge, experience, resource to help the people build a better life. That's what we understand. Human development is all about improving the well-being of people. It focuses on 3 main areas. This is important: sustainable development. Second is democratic governance and peace building. Third is climate and disaster resilience. And as we know, HDR is a flagship independent publication since 1990, and this year it has ranked India as 132 among 191 countries, and India is not at a better position as compared to its neighboring countries. So that's it, guys. We'll meet in the next video.